In March 2022, Occidental Petroleum's CEO, Vicki Hollub, received a phone call while driving her Jeep Wrangler. It was Warren Buffett on the line, revealing that Berkshire Hathaway had just acquired a 10% stake in her company. Occidental's stock had been rising, leaving everyone curious. With this unexpected partnership, a new chapter began for Occidental Petroleum, filled with excitement and potential.
Over the course of several months, Berkshire Hathaway continued to invest in Occidental Petroleum. Despite the decline in oil prices, Berkshire Hathaway made multiple purchases, increasing its ownership stake in Occidental Petroleum to approximately 23.6%. The investments took place in May, June, July, August, September, and March 2023. As a result, Berkshire Hathaway has become the largest shareholder of both Occidental and Chevron. At the end of 2022, energy shares accounted for approximately 14% of Berkshire Hathaway's stock portfolio, the highest percentage in over 2 decades according to company filings.
However, in the first quarter of 2023, global energy prices experienced a significant decline compared to the previous year's peak. Occidental Petroleum's average oil price for the quarter dropped by 19% compared to the same period last year, standing at $74.22 per barrel. Despite an increase in production from the Permian Basin operations, Occidental Petroleum's oil and gas daily production rose from 1.08 million barrels to 1.22 million barrels. However, profits still declined. Occidental Petroleum reported an adjusted profit of $1.1 billion, reflecting a 48% year-on-year decrease due to accelerated investments and shareholder returns.
The adjusted earnings per share for the first quarter were $1.09, significantly lower than the analyst average expectation of $1.24. Following the earnings release, Occidental Petroleum's stock price dropped. Capital expenditures for the quarter nearly doubled from the same period last year, reaching $1.5 billion. Pre-operating cash flow from operating working capital decreased by 24% to $3.2 billion. Occidental Petroleum has raised its year-end production outlook by an additional 20,000 barrels per day, totaling 1.22 million barrels per day.
In addition, in a recent development, Occidental Petroleum has redeemed preferred shares held by Berkshire Hathaway, valued at around $647 million. This accounts for approximately 6.5% of Berkshire's preferred shares in the company. Warren Buffett had obtained these shares 4 years ago during Occidental Petroleum's acquisition of Anadarko Petroleum. The redemption cost a total of $712 million, including a 10% premium over Buffett's purchase price and a dividend equivalent to common stock shareholders. Despite the redemption, Berkshire Hathaway still holds preferred shares worth approximately $9.35 billion and owns around 24% of Occidental Petroleum's common stock.
During Berkshire Hathaway's annual shareholder gathering, investors eagerly anticipate Warren Buffett and his team to provide insights into their decision-making process behind acquiring a significant stake in 2 major producers in the Permian Basin. Shareholders are particularly interested in understanding Berkshire's perspective on the future of the oil industry and the companies involved in oil drilling, considering the global shift towards reducing reliance on fossil fuels. Warren Buffett and Charlie Munger provided their response and insights regarding the reasons behind their purchase of a 24% stake in Occidental Petroleum. Let's take a closer look at their comments.
Warren Buffett went on to discuss the reality of oil production in the United States, highlighting the importance of understanding different types of oil businesses.
When you talk about the oil business, you're talking about different kinds of businesses, basically.
Buffett said, "In the United States, our daily consumption of oil is significant, around 11 million barrels or slightly less. As for our production, we produce around 11 million barrels of oil equivalent per day. However, if shale production were to cease, our production would quickly drop to 6 million barrels. Just imagine a reduction of 5 million barrels per day in global production."
Just imagine taking 5 million barrels a day out of the production in the world.
When we continue to extract oil, we are simultaneously depleting our strategic petroleum reserves. The Strategic Petroleum Reserve represents the ultimate form of commercial oil fields. At this point, you don't have to keep drilling the oil fields. But, of course, there will come a day in the future when we will need to drill again. This is considered strategic, and it also involves politics. So, when you talk about the oil business, you are essentially discussing various types of different businesses.
Warren Buffett acknowledged the uncertainty surrounding oil prices, but expressed his favorable view of Occidental's position.
We don't know what oil prices will be, but we do very much like the Occidental position they have, and that's why we finance them.
He mentioned that Berkshire Hathaway had provided financing to Occidental a few years ago, a decision that initially appeared to be a mistake when the oil market experienced a severe collapse. However, circumstances changed, and Berkshire Hathaway subsequently purchased a significant amount of Occidental's common stock. In recent months, Occidental has reduced Berkshire Hathaway's preferred stock, a move that Buffett noted was intelligent from the company's perspective. While they were not pleased with the reduction, they would have been disappointed if Occidental had not taken such action.
Warren Buffett emphasizes that while the United States has been fortunate to tap into shale oil reserves, it is not a sustainable long-term source of oil as portrayed in movies or popular media. Charlie Munger adds that shale wells have a short lifespan, resulting in quick depletion. However, both Buffett and Munger express admiration for Occidental Petroleum, highlighting their efforts in drilling new wells and operating profitably. They acknowledge that Occidental deals with a different kind of oil compared to shale.
Yeah, they drill a lot of new wells
Charlie Munger also highlighted the challenges involved in oil production, particularly in the Permian Basin.
Nobody knows how to produce, and they've been working at it for like 50 years. But they worked at the existing shale production for about 50 years before they figured it out.
He mentioned that there is a significant amount of oil underground that has yet to be efficiently extracted, despite decades of efforts. It took around 50 years to figure out the complexities of shale production and the specific requirements for successful drilling. Charlie emphasized the unique nature of the process, including the use of a particular type of sand. Warren Buffett added to the discussion, marveling at the concept of drilling a horizontal pipe that stretches for miles beneath the Earth's surface. He acknowledged the technical expertise required to achieve such feats and extract oil from these wells. Their comments underscored the intricate and specialized technology needed to tap into the vast oil resources present in the region.
In addition, Warren Buffett and Charlie Munger also praised Occidental's CEO, Vicki Hallam, and her expertise in the field. While Buffett admitted he didn't have the technical knowledge of oil drilling, he acknowledged the math of oil business.
Finally, Warren Buffett clarified that Berkshire Hathaway does not have any plans to make an offer for control of Occidental Petroleum. However, he expressed their satisfaction with the shares they currently hold. Buffett mentioned the possibility of acquiring more shares in the future, but emphasized the importance of the warrants they obtained as part of the original deal. These warrants allow them to purchase a significant amount of stock at a favorable price, and Buffett expressed his appreciation for having them, as they remain valid for an extended period.
To sum up, Warren Buffett's decision to invest in Occidental Petroleum is grounded in several key factors. Firstly, the company's substantial oil reserves provide a valuable and sustainable resource that aligns with Buffett's long-term investment approach. Secondly, Occidental's advanced technology and expertise in the oil and gas industry enable them to efficiently extract and produce oil. This technological advantage enhances the company's competitive position and potential for growth. Lastly, Buffett's confidence in Occidental's management team, led by Vicki Hallam, demonstrates his trust in their ability to navigate the challenges and capitalize on opportunities in the industry.
We hope you found this information useful and informative. If you have any comments, we welcome you to leave it below. Your input and discussions help us all learn more. If you liked this video, please consider giving it a thumbs up and subscribing to our channel for more content like this. Remember, your support helps us continue providing quality content. Thanks for watching, and we look forward to meeting you in our next video.